Class, good morning. This is your prof, Sir Dan, and we will continue the discussions for this week. And our topic is still processing transactions of a merchandising business, but we are already on part 5, which is the last part of merchandising business. And on part 5, we will illustrate the preparation of income statement of merchandising business using periodic method. Actually, we were prepare all financial statements, okay, which will include statement of owner's equity and statement of financial position. But we will focus more on the preparation of income statement. Okay, let us have our words of wisdom. The first one: I woke up. I have clothes to wear. I have running water. I have food to eat. Life is good. I am thankful. Okay, we have to be very thankful for everything that we have. And another way of expressing our thanks is that at the end of the day, I am thankful that my blessings are bigger than my problems. Plus, despite of the challenges that we have to count all the blessings. Okay? And let us now begin with our lesson. Class, here we have the balances of Superstore for the year ended December 31, 2019. These are the balances. And these balances consist of the accounts that we have already learned. And the new accounts on the balances are sales, sales returns, purchases, freight in, purchase returns, and freight out. So, class, uh, these are the accounts that we are going to use in the preparation of the financial statements. So, another information here, additional information, I would say. On December 31st, 2019, Superstore conducted the year-end inventory count, which indicated a total inventory of 55,000. We have learned that under periodic method, a year-end inventory should be done, okay, to compute the cost of goods sold. So required, prepare trial balance, income statement, statement of owner's equity, and statement of financial position. We have here an important information. So it states that merchandise inventory of 30,000 is the inventory beginning to be presented in trial balance. So sinasabi na itong 30,000 daw ito ay beginning ito na should be presented in the trial balance. And the year-end inventory, which is the count, okay, is the amount of inventory to be presented in the statement of financial position. Actually, pagdating sa adjusting entries, which we have not discussed yet, may mga adjusting entries na magre-reflect ng ganong situation sa inyong general ledger. Okay, this is what we have. The first thing that we have to do is prepare the trial balance. So yung trial balance natin, this is our regular columnar headings, and these are our accounts. So you should know the normal balances of these accounts. Cash on hand is debit. Accounts receivable is debit because it is an asset. Allowance for doubtful accounts is credit because it is a contra account of accounts receivable. Merchandise inventory is debit, an asset account. Supplies, prepaid, insurance are both debit. Equipment is debit. The contra account of equipment is credit. Accounts payable, because it's a liability, it's credit. Notes payable, a liability account, it's credit. Owner's capital is credit. And then owner's drawing is a contra account of capital is debit. Okay, sales, it's a revenue, so it's credit. Sales returns, contra account of sales is debit. Purchases is debit. Okay, freight in is debit. Purchase returns is a contra account of purchases, so it's credit. And all expenses will have a debit balance. Okay, all expenses will have a debit balance, and part of the expense is your freight out. So if you have done it correctly, you should have a balanced trial balance. Okay. So let's move on. We have now a balanced trial balance, and we can now proceed in the preparation of financial statements. Okay, this is our trial balance. And the first statement that we are going to prepare is the income statement. So in the income statement, what we need are nominal accounts, and for merchandising business, our nominal accounts are sales, sales returns, purchases, freight in, purchase returns, and all the expenses. Okay, so we have first to present our revenue, which is sales. Okay, and our revenue is 306,000. Okay, and then we have to deduct what? The contra accounts. So in this case, we only have one contra account, and that is sales returns and allowances. So we will deduct that from sales, and we will have our net sales. Then after that, we're going to compute the cost of goods sold. So in computing the cost of goods sold, we have to present our inventory beginning. Our inventory beginning is 30,000. So we have to present that, and we have to add the net purchase. So in adding the net purchase, we have to have our purchases, which in this example is 180,000. And then we have to add the freight in. Dapat idagdag nyo agad yung freight in, okay, which is 10,000. So after that, you will have our gross purchases, okay? And then the gross purchases, we will deduct the contra accounts. So in this case, we only have one contra account, which is the purchase returns. Okay, if we have purchase discount, we have to deduct that. Okay, so deducting that, we now have our net purchase. Ito yan. We have now our net purchase. So our net purchase is that the purchases, you have to add the freight in, deduct all the contra accounts. That will be your net purchase. The net purchase will be added to the inventory beginning. That will be your merchandise available for sale. So your merchandise available for sale, this is the available for the year, the items to be sold for the year. So now we will have to deduct from merchandise available for sale the inventory end. Nasaan yung amount ng inventory end natin? We were given that on December 31st, 2019, Superstore conducted the year-end inventory count, which indicated a total inventory of 55,000. So yan ang inventory end natin, yung 55,000. We will deduct that from merchandise available for sale. That will give you now what? Your cost of goods sold. So your cost of goods sold, okay, will be deducted from your net sales, okay? That will give you your gross profit. So after computing the gross profit, we will deduct all the expenses, okay? Lahat ng expenses, i-deduct na natin, including the freight out. So all the expenses will be deducted. Then you will have your total expenses, okay? And then gross profit minus total expenses will give you your net profit. Class, by the way, don't be bothered about if it is presented as parenthesis or not, okay? In this case, nagiging emphatic lang ako kaya ako pinipresent in parenthesis. But in as much as kung meron nakalagay dyan less, 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 pwede nyo nang hindi i-present, okay, class? As long as you know how to calculate it properly, okay? Like in this case, expenses, kasi it's already a known information to everyone that expenses are deducted from gross profit. Okay, class? So it depends on the preparer. Okay? But the most important thing here is you know whether it has to be deducted. Okay, class? Let's move on. So this is our trial balance again. And the next thing that we're going to prepare is the statement of owner's equity. Actually, itong statement of owner's equity, pwede na natin siyang i-present sa statement of financial position dahil simple lang naman siya. However, wala kasi tayong space sa PowerPoint natin sa statement of financial position. So, I decided to prepare a statement of owner's equity. So, statement of owner's equity, will start that with owner's capital beginning, which is 160,000. Then we have to deduct the drawing of 5,000 and add the net profit. So we will have our owner's capital end of 220,000. Okay, class? And the next statement is the statement of financial position. Okay? So we will have our assets, and we have our cash of 50,000. We have our accounts receivable, less the allowance for doubtful accounts. Okay? And here, class, the merchandise inventory of 55,000. What we are going to reflect under merchandise inventory on the statement of financial position kasi end na ito ng 2019, okay? So we will reflect the count. Okay, class? We will reflect the inventory count. And then the other current asset account. So we will have a total current assets and then present the non-current assets, equipment, and accumulated depreciation as a contra account. And then we will have the total non-current assets and current assets plus total non-current assets will give you your total assets. And then liabilities and equity, we have the accounts payable and the non-current liability of notes payable. We have to add that. That will be your total liabilities plus your equity, your owner's capital end of 220,000, and we will have total liabilities and equity at 330,000. You will note, class, na balance ang ating total assets with our total liabilities and equity.